What's up, guys? It's another beautiful week. We just want to drop some more knowledge for you again. This week we got the path to affordability. I'm Dylan Anderson over at the Real Brokerage of California here in Fresno in the Central Valley.
Edgar Franco, Apex Mortgage here, also in the Central Valley, serving all of California.
Yep, yeah, we're all throughout the valley and the entire state. Don't forget, we can help you anywhere through here. But yeah, we're coming to you guys, not live, but hot, with some good stuff, some good tips on just kind of finding out what it takes to buy a home or how affordable it is, right? So Edgar's going to drop some major truth bombs for us and give us a little bit of insight on what we could do today.
So let's kick it off. So for starters, stay within your budget. Obviously get pre-approved, but it's not about how much you can qualify for. It's about what you feel comfortable paying per month for a mortgage payment. And that's what we like to say, stick to your monthly comfort zone. So if your monthly comfort zone is going to be $2,500 or $3,000 a month, or maybe even $5,000 a month, let's stick to that. Even though you can qualify for something much more, you don't want to stretch yourself thin. Yeah,
it doesn't matter if you're qualified for $1 million if you're comfortable with monthly payments, $3,000, right? That's where we want to start. Not the number of the house, but the number of what you want to pay each month, essentially.
And he said something off camera. We're talking about it. It's like keeping up with the Joneses, right?
Yeah. Definitely don't want to be trying to keep up with the Joneses. So like every night, if your mortgage is stressing you out, that's not the whole goal. Get into a strategy, build a plan to where maybe the home that you buy now is the home that you're only in for 3 to 5 years, or it's more of a starter home that it's in a safe location, you feel comfortable with it, it suits your needs, and it can sustain you and your family for the next couple of years. And while you're in that home, we can already start mapping out a new plan of, okay, what's next, right? So don't feel like you have to go from start to finish all at the same time. Sometimes we got to have a little bit of a building block in order to get you where you really want to go.
Yeah, and then one thing that we put on our slide here is cheaper sales price doesn't always mean cheaper cost of living. So some of the some of the things like PG&E, your trash or water bill, is it in an HOA? Does it come with solar? So I mean,
go super deep dive on that. Like I've even had a client before, she loves bigger backyards, the older neighborhoods, kind of like Old Fig Garden, right? But she was a first-time home buyer, so getting into it seems very cute, very appealing. But when the home was built in 1945 and the plumbing is older, the roof is older, like the AC venting hasn't been updated, you got 2-prong outlets, no ground. There's so many different things I could keep going through on what it is that the home still needs to be updated. But when we take all that into consideration, just because the home is cheaper on a purchase price element doesn't mean that when your cost of living, your PG&E, the cost of having someone come out and repair your piping because it burst, replacing newer, your older windows, replacing your AC unit, replacing your roof, all these things add up very, very quickly. So maybe putting $30,000 or $40,000 more to your purchase price might save you $100,000 and a whole lot of time later on down the road.
Yeah, and if you went up in purchase price, let's say you're qualified at $375, when you compare the monthly payment from a $375 and you jump up to $425, assuming you qualify for it, the monthly payment isn't that much more, because now you're probably offsetting the PG&E costs with an energy efficient home and things like that.
Correct, yeah. There's definitely some checks and balances to look into it. So that's a great point, Edgar.
Yeah, and then also too, one thing that we were talking about is getting your numbers from your local real estate agent or your loan officer.
Super important, yeah.
Because we have clients, reach out to us like, hey, I seen this on Zillow. It's saying that my monthly payment's gonna be $1,200 a month. Is that true?
Yeah, at 11:30 or 12:30 at night. And don't get us wrong, we love you. You guys are our favorite people because we know you're hungry about buying a house, right? But we want to still have that period with you where we can talk and converse, because no, the payment that you're seeing on Zillow is probably just principal and interest. There's no insurance or taxes, so it's leaving out a pretty hefty portion of what your total PITI is going to end up being, your total payment each month. Yes. So talk with us,
Get those real numbers.
Yeah, real numbers. Get the real numbers.
And that, again, that's where you set those expectations for yourself when you are scrolling, looking at houses or looking at the houses that your agent sent you. You kind of know what you're getting into.
Yeah.
All right, which brings us to our next slide. If you can do it now, do it.
Yes. Yeah, no, this is a great one right here, like Edgar has in here. It's not about timing the market, it's about your time in the market, right? So no one, if you've seen, it's a crazy movie, but Wolf of Wall Street, like Matthew McConaughey says, least of all people that know what's gonna happen is stockbrokers, right? So like if we're talking about Wall Street people, and you're trying to time the market, you have an everyday job, you're working, you got a family, and you're thinking, okay, I'm the best possible person to know everything that's going about, the statistics wise, the government, what's going on with Wall Street. The reason why I'm bringing this up is like, don't think or anticipate or want for a crash to happen. We don't want a crash to happen. We don't want people's houses to be 50% less than what they bought them for. We don't want people to be in those situations. So stop hoping or anticipating for that to happen. If you can't afford a home, you can get into one, do that, and stop trying to time the market. So hopefully that little tidbit isn't too elaborate.
Yeah, but I mean, also too, just doing this long enough, I've seen clients like in 2018, I'm just gonna wait for the market to crash.
Yeah.
2019, I'm gonna keep waiting for the market to crash.
Yeah.
We're in 2025 and the market is still going up. And it's just because Fresno, California, Central Valley, still one of the most affordable places in California, which I'm gonna argue and say it's the best state in the US, probably the best place to live in the whole world.
I think so. Arguably, yeah.
Yeah, and then like the demand for housing is still there. So are we gonna see a crash? I don't think so. It could probably happen, but it's very unlikely in my opinion.
Everything leading up to that isn't really showing right now. It'd have to be something so catastrophic where we're at World War III or something so doomsday-like that real estate would be the least of everybody's problems anyways, right? True. So that's kind of my mindset on it, not to be like super far out there, but it doesn't seem like it's coming anytime soon. So if you're anticipating in the next 12 months for something to drop and that's when you're wanting to buy a house, I would say let's start sooner rather than later before it just, that number of what's affordable just keeps staying slightly out of reach. And that's what we want to try and avoid.
Yeah, and then a statistic that we continuously see every year is that home prices continue to appreciate on average 4 to 6%. Some areas, different zip codes, maybe more than others. And some are pretty plateaued, just depending on the area, of course. But overall, we're seeing appreciation still take place. So in other words, like, hey, this house that you're looking at $350,000, you're saying, like, it's too much. Well, guess what? That same house 2-3 years from now is going to be sold at $385,000, $390,000.
Yeah.
And that could have been your equity, right?
100%. Yeah. So again, going back to timing the market, if you get into a house now, and again, maybe it's not the home of your dreams, but it sustains you. And this isn't to try and force you into a home or get people to buy houses. But again, just the simplicity of owning your own home and kind of having like your own piggy bank, right? So that way, as time goes on, when you do get to a point where you've built up enough equity, excuse me, to use as a down payment for the home that you have been looking for or you really wanted, you set yourself to be in that position as opposed to renting each month and just throwing that money away to a landlord that's paying down their equity.
Yeah, so. And one thing I always tell my clients too, because they don't know this, or most don't, is that if you purchase a home and you live in it for at least 2 years and you sell it, that's tax-free money, essentially, like depending on how much income you're filing. But for the most part, you can use all of that. It's not going to be taxed unless it's an investment property. But if it's your primary home, 2 years is a goal. Stay in it for at least 2 years. You can roll that equity into the next property when you purchase it.
Yeah, even investment property, 1031 exchange, just a little throw that in there. That's probably a topic for another video. But yeah, that's something you can do too if you're an investor and you're trying to avoid paying taxes, or at least avoid paying taxes right now, right? Because it comes for us all. But another little drop in for you.
Yeah, it's a good one. So again, the title of this is The Path to Affordability. Doing it sooner than later is going to lock in that price versus locking in a higher price later.
Yeah.
So which brings us to our next slide, which is going over creative solutions to make the mortgage more affordable. And a lot of people still don't know about this. It's called a 2-to-1 buy down, or 1-to-1 buy down, or 1-to-0 buy down. It's a program basically funded by either the seller through seller credit concessions, or the lender can also fund this program for you. Basically what it does, so for example, if the interest rate is 6% today, and if you are able to get a 2-to-1 buy down funded by the seller with seller credit, then the first year your interest rate's reduced by 2%. So starting rates, or the actual rate 6%, but on year 1 it's 4%. Followed by year 2, it's going to be at 5%. That's where the 1 comes in the 2-to-1. It's reducing your rate by 2% in the first year, and then by 1% in the second year. And the whole purpose behind this is just to buy you time to refinance. You can also do a 1-to-1 buy down, meaning you're going to reduce your interest rate by 1% for the first 2 years, or if the seller doesn't give you enough credit to cover a 2-to-1, you can still do a 1 to 0 buy down, meaning your first 12 months, you're going to have an interest rate reduction by 1% just to buy you time to refinance. And let's just say you happen to refinance before the 12 months or the 24 months pass. Any money remaining in that account goes towards your principal when you do refinance. So basically, you're getting a refinance for free.
Yeah, I mean, can't really beat that. Obviously, every single purchase or sale is going to be a little bit different. But if you're in a position where maybe a few $100 a month is really what's stopping you from being able to get in the home. And again, going back to strategizing for a plan, if you're only wanting to be in this house for 2 years anyways, maybe you want to rent it out later. These are great options right here. A key fact about these two, a 2-to-1 buy down, if we're trying to get the seller to pay for it, just going back to like one of our older videos, is sometimes with a home that's fresh on the market, very turnkey, it's a little bit harder to get a very high number of closing costs from a seller. But if we are kind of going back to homes that are a little bit older, right? So when we talked about the underlying costs of maybe buying a home that's a little bit more expensive as less. If you are buying a home that's maybe a little bit cheaper, that's older and needs some work done to it, get some closing costs, get the 2-to-1 buy down, and at least it's going to help ease that payment for you, right? If it's on the market a little bit longer, the seller might be a little bit more susceptible to these things. So great stuff from Edgar on just keeping your payment lower for sure. Talk with us, figure out which one of these might be the most beneficial for you, or if it's even going to work out for you, right? So.
Yeah, and going back to one of the older videos, we were talking about new construction, and a lot of times the builders, they'll give you an incentive of $25,000 of builder or seller credit.
Yeah.
And a lot of times they will not even consult with the buyer and say, hey, we're just going to buy down your rate. It's a permanent rate buy down where going back to that 6%, let's just say they use 9 to 12 grand, it's probably only going to get you a 5.5%. And it's not going to change your payment as much as if you would have applied that to a 2-to-1, or then now you're saving maybe $500 a month, $400 a month, depending on your purchase price size for the first two years, because we do think and do see that rates are going to come down. So that window of opportunity to save more money at a cheaper price is there for you. And that's where it's important that you talk to Dylan or an agent to find out, hey, I'm getting $25,000 credit from the builder. How can I use this?
Yeah, I was gonna say, for Edgar right there, just dropping all that knowledge, the way of looking at that is just, okay, how much am I gonna get from the builder and what's the best possible way that I can use this, right? And sometimes the way the builder is gonna approach you with these incentives maybe isn't the best way that you would want to use it. Maybe it's the way that they're wanting to use it on paper for it to make the most sense for them. And that's not saying anything bad against the builder. They're obviously trying to do the best things for themselves. They're a company. Their job is building homes and getting them sold, right? So our job though is to help you get the best possible situation and make sure you have all the knowledge possible to set yourself and your family up when you buy the home to feel like you're in a position of power, right? Like you didn't know what was going on. So if you're looking at those incentives, you have questions about them. Yes, it already is probably a great deal what you're looking at, but talk to us and see how maybe it's even a better deal or how you could use those funds to set yourself up for the longevity of the situation. So
yeah. And then like let's just say going back to maybe the seller doesn't want to cover your closing costs.
Yeah.
What are other ways you can do it? Is a simple way is just offering a little bit more than what they're asking on the sales price.
For sure.
And kind of walk us through how that works.
Yeah, just kind of a little bit of negotiation. If the price is $350, maybe the home has been sitting for a while or it hasn't, just depending on how what we're trying to negotiate, right? Again, everyone's situation is different. If the purchase price is $350 and we want a 2-to-1 buy down, let's say we ask for $8,000 or $7,500 above that price. So now $357,500 or $358 to offset what money we're trying to ask back. And then on the payment wise, that doesn't even really hit like a $10,000 threshold. So your payment probably is going to change maybe $60 to $80 if that. And Edgar can probably kind of confer.
Yeah, because I would rather keep $8 grand in my bank account and pay an extra $60 a month versus paying my own closing costs. So that's a good strategy to use. One thing to kind of look out for too is like, and this is why it's important to work with a really good agent, because now you got to see, is he going to appraise at that price? Because if it doesn't appraise, now we kind of have an issue where we got to go back to the negotiating table and maybe, that's where you got to figure things out. But if you work with a really good agent, they're going to know, well, they're going to look at the comparables that sold in the area and say, hey, this house has, for sure it's going to appraise. Yeah, essentially we want to set you up for success, not failure, and make sure that going into it, we know everything that's going on.
just touching back on that too, when we're asking for more, evaluating, okay, if I ask for $7,500 back in a credit and it's going to cost me $40 more a month because my payment's going to go up, right? But with a 2-to-1 buy down from the credit that I'm getting, my payment's going to drop $200 a month. You know, in reality, what it looks like is you're spending $40 to save $200, right? So again, talk to us. I know sometimes all this can just kind of just seem like an overload of information. So we want to help you. Give us that info and let's see how we can make it work for you.
Yeah, so this is just some ideas that we help our clients with, how to keep the house payment affordable. Yes, we've been hearing it, rates were high, right? But they're starting to cool off. And these are strategies that we're implementing today. Actually for the past 2 years, just to make the house more affordable. The people that have been doing this to get into a house instead of waiting for rates to drop are winning, because now they're sitting on some equity, and then now the rates are cooling off for them, and now they're getting ready to pull the trigger. I'm like, all right, cool, now I can lock in that lower rate and not have to worry about my rate going back up in the next year or two. So
some people did that during COVID, did a 2-to-1 buy down, got enough appreciation and equity in their home before the rate even changed, before the 2 years was even up. And then so if we're talking about strategizing and getting you into a home and moving in 2 to 3 years, you know, it's very possible for that to happen to you too. Obviously, COVID was an anomaly as far as how fast everything appreciated. So I don't want you to anticipate that your home will go from $400,000 to $500,000, you know, in a year or two. But again, anything can happen. We're just here to provide, again, the best possible situation for you. And a synopsis of all this too, we don't want you to do this if you still can't afford it. At the end of the day, this is just to provide an option to get you into the house. It's not to put you in a position where you're forcing a home upon yourself. Because at the end of the day, if the rates don't drop and you're not comfortable with the rate that you were initially promised when the 2-to-1 is up, or the 1-to-1 or 1-0, then yeah, you do have a payment that you're now stuck with until the rates do drop. So there's always that. We're not saying it's a perfect world, but these are solutions to modern day problems, if you will.
Yeah, I mean that, excuse me, pretty much wraps up what we wanted to talk about in today's video.
Yeah.
Reach out to us. I mean, we know there's still a lot more that we can talk about, but we're going to save that for the next video. But that's why we want you guys to engage with us. Reach out to us, call us, email us. Put a comment in the comment section below.
When it comes to anything financial, this guy, he has a huge brain. Even though on camera his head looks way smaller than mine and mine looks massively proportionate to everything out here, this guy has tons of stuff that he could share with you. I mean, if you just came to him with your situation, Edgar's going to be able to break down everything for you and just show you, again, an example of, hey, here's A, B, or C. Let me know which one works for you and which one will work for me, right?
And
so
when it comes to buying and selling, he has a pretty big brain. And, you know, the X-ray shows
Toot
it.
my horn. You know, the X-ray results are in. No, that's awesome. But no, well, we appreciate you guys. Thank you guys again for tuning in. Another beautiful week. We hopefully that you guys have a great rest of your week. And as always, if you have any questions, please post them in the comments, DM us, and of course, subscribe. We're always going to have more content coming out. Again, I'm Dylan, and thank you guys. You take care, all right?
See ya.